Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Friday, 21st November, and this is your London Open Brief. Three themes set the tone. Japan rolls out a large stimulus as inflation stirs firm and the yen stabilizes. Asia follows a sharp U.S. tech reversal lower, and energy is softer with oil under pressure. Asian equities slumped after Wall Street's abrupt turn in artificial intelligence stocks, with SoftBank down by more than 10%. Stronger U.S. hiring has trimmed the odds of a December rate cut, which cooled risk appetite. Yet the dollar's recent surge is pausing, with pairs like dollar-Swiss franc pulling back and gold holding slightly weaker as rate cut hopes ebb. In short, mixed signals on U.S. policy are keeping currencies choppy. Japan is the big macro story. The cabinet approved a 21.3 trillion yen stimulus plan, the largest since the pandemic, focused on price relief and investment. Prime Minister Takaichi signaled new bonds could be used if tax revenues fall short, while keeping overall government bond issuance below last year to steady debt sentiment. The data backdrop supports a firmer yen. Core inflation rose to 3%. Exports beat expectations on stronger demand from Asia and Europe, and early purchasing manager readings were mixed but still point to resilience. The yen found modest bids, with euro-yen edging lower and Aussie-yen retreating from one-year highs, and the Bank of Japan has reiterated that further tightening remains on the table if its growth and inflation forecasts hold. For traders, that matters. Commodities are easing. West Texas oil is sliding, with prices marked lower as tensions around Ukraine-Russia cool and fresh sanctions are discussed. Crypto is under pressure again, as a large holder's selling weighed on sentiment. Meanwhile, the Australian dollar is firmer after better local purchasing manager data and a softer US dollar tone, while dollar rupee edged lower even after softer Indian PMI figures. Turning to markets and sectors, the combination of Japan's fiscal push and firm domestic inflation is supportive for the yen and nudges local yields higher, which can weigh on export-heavy equities near term. Softer oil is disinflationary at the margin and tends to support rate-sensitive assets. But today, the dominant impulse is risk-off from tech. The dollar looks mixed into the London Open, with a pause against the Swiss franc and some softness versus high-beta currencies like the Aussie, while gold remains range-bound, with a slight downside bias as immediate Fed cut hopes fade. Looking ahead, it's an active data slate. The European morning brings UK retail sales and flash purchasing manager numbers across the euro area and the UK, which may not change central bank paths but can move markets. In North America, watch Canadian retail sales, the US flash PMIs, and final University of Michigan sentiment, with the PMIs the likely driver. On the speaker circuit, we hear from European Central Bank President Lagarde and several Governing Council members, plus the Federal Reserve's Williams, Jefferson, and Logan, and the Swiss National Bank's Schlegel. Markets are pricing roughly a 1 in 3 chance of a December Fed cut, so surprises in the PMIs or tone from Fed officials could sway that. What I'll be watching today: dollar-yen. Looking for a mild downtrend if yen bids hold on the fiscal package and firm inflation backdrop. Euro-yen for further downside if European PMIs soften. Aussie-US dollar. An uptrend if Australian resilience meets a softer US tone. Dollar-Swiss franc. A drift lower as the dollar rally pauses. In commodities, West Texas oil for further downside momentum if risk sentiment stays weak, while gold likely chops in a range, sensitive to any surprise in US PMIs. The takeaway: policy and growth are pushing in different directions. Japan is easing fiscally while hinting at tighter money. The US path is data-dependent, and for now markets are cautious but not panicked. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.